Hi everyone, let's cover my updated 4-hour time frame Elliott Wave scenarios on Bitcoin. And at the end of this video, I will make sure to summarize everything, talk about the probabilities, and highlight some important things that you should know about as they impact the probabilities of Elliott Wave scenarios. Starting with the most bullish Elliott Wave scenario, which is a finished WXY double zigzag, after which we then want to see a multi-12 followed by a wave 3 and strong continuation of the trend. Now in a double zigzag, a common target for wave X is the 0.382, which is touched, and the target for wave Y is the 0.618. Not always a very common target, but it is a target nonetheless. The vertical line on my chart is a fib time, comparing W with wave Y. And you can see wave Y is very short in time compared to wave W. It finished before the 0.382, which is not something you often see. However, time is not a full invalidation nor a full confirmation. Structure always comes first, time comes second. And when we look at the structure here to the downside, we can count a zigzag in a W and also a zigzag here in a potential wave Y. And that is why you have to be aware of this scenario. Now the price action that you want to see in a multi-12 is similar to what we had over here after the 49K low. So this is something that you want to look out for, right? Made the low, and you can see we then have a bunch of 1-2s, and eventually you get your big wave 3 to the upside. Preferably, the price action overlaps with one another, forms a little bit of a diagonal-ish type of a structure, but then you get your wave 3 towards the upside, and eventually your 4-5s to finish a big impulse, right? So that is something to keep in mind. Now be aware though, that finishing this correction and continuing the trend also means that on a higher time frame, this correction here would be finished before touching the 0.382 fib time of this impulse to the upside. So preferably, we actually continue a correction for a longer period of time, right? Preferred, because commonly you would finish something after the 0.382. And that is what is possible with what you see here on the chart. This is a flat. Now, you still have a WXY double zigzag to the downside, and preferably you're still looking for the all-time high, but instead of strong continuation, you drop back in the range. This is a flat ABC after wave C eventually continue towards the upside. Now, the WXY is then your wave A. Inside wave B, you look for a zigzag family structure. Now, based on the move that we have here, I would consider something like a wave W, zigzag X, and then a wave Y, a double zigzag to the upside in a wave B. We also have a little bit of support to the downside here, locally at 103.2K. So it would be nice to touch it, then continue towards the upside to find some resistances. We have some resistance at 107.5K. That's the first area, but my main area of resistance here is around 109. So that is definitely an area that I keep in mind. But then after your 3-wave move up in W, you look for your wave X, which should of course be a corrective structure. And then you look for your wave Y, which has to be a zigzag. Now, a common target for wave B is this area here, the 1.236 to the 1.38 Fibonacci, taken from the start to the end of wave A, giving you a target between 114.7K and 116.4K. After B, you want an impulse down in a wave C, 1, 2, 3, 4, 5. Now, wave Cs can be incredibly volatile and also include a high amount of volume, so they can look very scary, which might be a good thing, as people might get scared thinking that a significant top is in and we move significantly to the downside, but that creates the liquidity to then move back towards the upside. Now, if price would continue up and touch this level here at 119.1K, this scenario, a flat, significantly reduces in probabilities. Not often do you see a wave B go all the way that high. It would be a very rare target for a wave B. Now then we go and talk about a sideways WXY, some lower probabilities, and I'll explain why. So here we have a W, X, and then we look for a flat in a wave Y. Right? This is a sideways double combo. Why? Well, wave W is a zigzag, Y is a flat. Right? However, in a sideways double combo, a sideways WXY, it's by far most common for a wave X to get a high retracement compared to W. Not so shallow. It only touched the 0.382, which is fine for a double zigzag. That's a common target for a double zigzag. A shallow X is what you want. 0.382, 0.5, that's fine. But in a sideways WXY, you actually want this wave X to go higher. Golden pocket, 786, 886, because that then creates a sideways movement. And that is what we like to see. So finishing wave X here is a little bit meh, right? And then after wave X, we would look for a wave Y. Now wave Y can only be a triangle or a flat structure if wave W in a sideways WXY is a zigzag. Now, it's too early to talk here about triangles, right? So a flat would have the highest probabilities, where you then have an A, B, C. In a wave B, we would still look for some upside, right? So this would be a 5-wave impulse, 3-wave correction, 5-wave impulse, like a zigzag to the upside in a wave B. And then you want an impulsive move down in your wave C, right? Common target for your wave B is 108.4K, 109.3K, which overlaps with the blue box that I spoke about, right? So that is your area of resistance. But it is a little bit tricky to give this scenario the highest probabilities because your wave X is so super shallow. So instead, what we can consider is not finish wave X, W, X, and then wave Y. I depicted wave Y here as a triangle, but mind you, it can also be a flat, right, in an A, B, C. I just made it a triangle for the chop, right? So this is your zigzag W, but now your wave X is bigger. A, B, C. Now here you can see, however, that wave B touched the 1.618. And I just mentioned when talking about that big flat, right, the second scenario in the video, that the 1.618 is not a great target for a wave B. It's not a common target for a wave B. On the other hand, it's quite a rare target for a wave B. So it does lower the probabilities for this scenario. You actually don't really like to see this, right? It's very deep for a wave B. It's not an invalidation, but it does significantly lower probability, so it's not great. Now, by all means, your wave C and then a wave A, B, C should be a 5-wave structure, right? So preferably we see a wave 1, 2, 3, 4, 5, right? Expanding flat in that case, where your wave C takes out the end of your wave A, which is a common. A running flat, A, B, C, where C does not take the high of wave A, would give us the same problem of wave X being super shallow. So in other words, for a sideways WXY, you preferably go up, right? Reach at least like a golden pocket, 786, etc. No? Now you can also see the 0.7 on my chart, which is important because the 0.7 would significantly reduce probabilities of a bigger double zigzag to the downside. So WX is a flat, but if the flat is not reaching the 0.7, it still has the door open for a potential sharp move to the downside in a WXY. So a bigger WXY double zigzag. Now in a double zigzag, most commonly your X, however, is a zigzag family structure, but a flat can happen in an X as well. A wave X can be any corrective structure. So that's why I have it on the chart, just to let you know. Now after wave X, we then look for wave Y, either a triangle or a flat. It's most important by any means that we just take out this high of A and move at least to a golden pocket 786, 886 for this wave X. That's basically what I want to say. And then we have the most bearish scenario where we have a multi-1-2, 1-2-1, and then preferably bigger 2, and then wave 3 to the downside. At the moment, not the highest probabilities, right? But it is important to have bearish scenarios as well and know when they are higher or lower probability. Now, your second wave 1 here, right, is bigger than your first wave 1, both in time and price. Now, again, not an invalidation, but preferably in a multi-1-2, your second wave 1 and your second wave 2 are a little bit shorter in time and price compared to your higher degree, wave 1 and wave 2. Let me go back in time, right? We can come here as well. And you can see like you have your, this here still has the potential of a wave Y. So let's like start counting here, right? If you have your 1, 2, 1, 2, 1, 2, right? This is something that looks pretty chic. The wave 1s are maybe relatively similar in size, right? In time and in price, or a little bit shorter. And so are the 2s, right? and here you have your wave 1 that is bigger in time and price, not an invalidation, and your wave 2 preferably isn't finished here. We can't, because this is very much a 3-wave structure, and if we're looking for a 3 down, we need an impulse down. So therefore, this wave 2 would be bigger, right, in a flat, which also means that this wave 2 compared to this one is significantly longer in time. You can take a fib time from the start to the end of the first 2 to the end of your second wave 1, toggle on the 1-to-1, and just look. This, if this wave 2 would finish here, you have equal size between the twos. Look how massive this is, right? So that lowers the probabilities for this scenario. Let me actually double check. I actually didn't check this in my preparation. So currently, this second wave 2 is 4 times bigger than the first one. It's not great. It's not great for this scenario. Now, by all means, if price moves towards the upside and touches the 886 at 109.9K, probabilities even lower. Invalidation is the high at 110.8K. Preferably, you see an expanding flat ABC 1, 2, 3, 4, 5 to the upside. So preferably, right, you see more upside. An expanding flat is more common than a running flat. In an expanding flat, your C takes out this high. In a running flat, you don't, which would be most bearish. But of course, also here, you touch the 1.618 for this flat, and I already spoke about the meaning of that 1.618. Now, we do have some news coming up next week, so just make sure you are prepared here. These times are Central European time zone, right? So just keep these in mind because it can increase the volatility on the chart. I will be traveling as well in the upcoming few weeks, actually, but I will take my setup with me and my microphones that I plug on my shirt. So I will continue to make content, right? Just know that I will be out and about. And then we talk about the probabilities and the polylines. The polylines show you a summary of the expected price action per Elliott Wave scenario. And by putting them on the chart, you can basically see the consensus of the different scenarios together. The only scenario that would basically do this would be if we like to count this as a running flat, but that's the rarest structure. But let's start with the text first. As price gets more information, the move up has an impact on probabilities of Elliott Wave scenarios. And I'm talking about this move to the upside, right? If this move up becomes a 5-wave structure, the probabilities increase for a sideways WXY, right? With a flat in wave X. So this one, okay? Because you need a C5 waver. And the potential, at least, of then a multi-1-2. Even though that would have lower probabilities than a sideways WXY. Now, if price can touch 109.9K, the multi-1-2 goes in the bin. It's still on the chart because still a possibility. It just doesn't have high probabilities. But yeah, if you touch this in the bin, touch 109.3K, double zigzag in the bin. And with that, I mean WXY, sharp double zigzag. Touch the 07, we don't really look at that anymore. In general, I don't really enjoy a double zigzag like this, but it's officially an option, just not great probabilities. Note, running flat is an option, not the highest probability, would only fit with a multi-1-2, meaning this at the moment. If the move towards the upside here is a 3-wave looking structure, then we can look at a finished WXY where you have your 1-2s stacking, right? Because mind you that a multi-1-2 might look a bit 3-wavy. You get a 5, you get a 3. You get a 5, you get a 3. You might think, hey, this is an ABC to the upside. But then in hindsight, as you create another 5 and another 2 and another 5 and another 2, that is the moment where eventually you'll be like, wait, is this a multi-1-2 or are we looking for maybe a WXY double zigzag, right? Those are going to be options, but initially it will look like a 3-wavy-ish looking structure. So the moment you see a 3-wave move up, right, you got to think about this, a finished WXY followed by a multi-1-2, a finished WXY where you look for a flat, as this is also a 3-wave down and then another 3 towards the upside, right? Or a sideways WXY with a flat in wave Y, right? So 3-wave, your B, go down in your wave C. Which all, by the way, are corrective structures, the last two. So most of the scenarios lead to new all-time highs, right? Basically, except the multi-1-2. Now, probabilities, on the number one spot, I actually put a finished WXY which is in your most bullish scenario something to keep in mind, as well as the flat. And that is because of the structure. And on the number 2 spot, I put the others. Arguably, the multi-12 goes on the number 3, but you know. The more I look at this structure to the downside, the more I like to have a potential here finished WXY, because in other scenarios, right, the low is either wave B, which is very deep, touching the 1.618, which is definitely not a common target. Right? It's quite a rare target for a B. Or you have a very shallow X in a sideways WXY. So here, WXY, this it works. Wave Y is short, but I prefer to give lower probabilities to a shorter wave, or a short wave Y, right? For me, is not as bad as having a, 1 second here, having a very, very shallow wave X for a sideways WXY that did not even get to a golden pocket, or a flat structure where wave B touches the 1.618. So that is why I'm like, well, I would prefer the WXY in this case. And then as price is following to the upside, right, we keep an eye on, is it a 3-waver or is it a 5-waver, right? And then as we get more information, we will know how the probabilities change, right? A 3-wave structure, you keep an eye on what's written here. 5-waver, well, keep an eye on what's written here, here, with initially a WXY, right? An alternative is a multi-12. So this is what I wanted to say before I jump into an airplane soon. So you are prepared, and make sure you trade safe. Enjoy your weekend as well. I hope this video was helpful or valuable to you. Please check out the video on the left, the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.